Welcome. I'm a self-taught options trader aiming to earn an average of $10,000 a month. Let's dive in. Okay, do that. Okay, so it's Friday, October the 4th, 2024, and the market's been mostly flat to down this week. So we're ending on a good note. Jobs data came out strong today. So looking at some of my bigger holdings here, CleanSpark is still way down. MicroStrategy seems to be up against some resistance here, so I guess it'll either break through or come back down. Riot, another one. It's way down, but having a nice day. Coin is another one. Again, way down, but having a nice day. And the one, in my opinion, that drives all of those is Bitcoin. So Bitcoin came up and rejected with the start of the war with Israel. And we seem to have hit a bottom and turned a corner. BTCC.B, again in the middle of a range here. And that's kind of the main thing. The only other thing is the VIX. It's been sort of a little bit elevated and choppy lately since, I guess, beginning of August. So I don't really have a lot of trades to make today, but let's just have a look. Again, I have a Canadian margin account and a USD margin account, and I'm trying to earn $10,000 a month trading options. A lot of that is selling cash secured puts and earning premium for that. So on expiry today, I have this. Oops. So on expiry today, I have this BTCC.B expiring October 4th. So I sold 10 contracts at 45 cents. So I would have earned $450 for that. And the deciding factor, so right now it's trading at 12.01. So if it closes at 12.01, these shares are going to get called away from me. So I'll keep the $450 in premium, and they will take away 1,000 shares of BTCC.B, and they will leave $12,000 in my account. So that's really the only thing that's expiring today. Next week, I've got 10 $12 calls expiring and 20 $12.50 calls expiring. And then looking further out, I've got a fair amount of covered calls sold, and those at one point were all put to me. Looking at longer expiry, and when I initially bought these, it was like 365-day expiries. So they're now just over 3 months, 3.5 month expiries. So these I really need to start doing something with. So most of them, I've got a nice profit. So I have to decide, am I going to sell them and take this profit, or will I exercise them, which would allow me to buy basically 1,000 shares at $5 plus the $1.35 that I paid in premium. So my cost would be $6.35. And right now they're worth $12. So I imagine I will exercise some of these and probably sell some just to have more cash so that I can sell more puts. So that's my Canadian one, and I've got puts going here all the way into January of 2026. So when the price is down and the vol is down, then generally I pick away and I'll buy 5 or 10 contracts here, sort of for a rainy day. The other one is my US margin account, and not much going on there. Again, I got put a lot of Clean Spark and a lot of Riot, and so I don't have any cash to sell cash secured puts in this account. So all I have is my calls that I've purchased. And again, these used to be really long dated, but now we're starting to get close, and I need to think about doing something with them. In my mind, all of these will go up if Bitcoin goes up, and I still think that we're going to see some appreciation in the price of Bitcoin, or at least I hope. But of course, I'm no expert. The one that I'm most concerned about is this Coinbase. It's expiring in 105 days, so that's 3.5 months. I've paid $16.93 for 8 contracts, and it's only worth $5,600. So I'm in the hole $7,900, and I really don't like the way that one feels. Plus, this Riot one, I don't love the way that one feels either. So I'll really start to get worried when these hit 30 days, and generally I'll try, if I can, and sell them. The only other thing to look at, I did a bit of a spreadsheet here just to show what happened. So I have 5,300 shares of Riot. My cost is $10.45 per share, and the market price today is $7.74. So the value is $41,000. My cost is $55,000. So I'm underwater $14,000, and that's because I sold puts and they got put to me. So if I look at Riot here, let's look at 1 year. Okay, so I was selling puts in this $10.50 range, and they got put to me on this drop in August. So the price now has come way down to the point that if I was going to sell, so if I look at Riot here, if I was going to sell a 1 month $10.50, I'd get 11 cents. So 0.11 divided by 10.5 divided by 28 times 365. So it's like a 13% annual return. And I'm targeting 50% annual return on what I'm selling. So I'm just stuck right now, which means I'm not earning any premium until the price of the underlying comes up closer to $10.50. The other one is Clean Spark. So I have it in 2 different purchases. So this 1,400 shares I got put at $14. So I was selling puts for $14. And if I look here at Clean Spark, so Clean Spark was trading up and down, and it sort of was bouncing off $15. So I thought I was being safe selling puts at $14, but that worked from March until July, and then it stopped working. So that strategy worked until it stopped working in August. And so when the price dropped down here, I got put all of those shares, and now, the price went as low as $8. And so if we look at CleanSpark, 28 days, so I need a $14. I could get 15 cents right now. Where's my calculator? So 15 cents divided by 14 divided by 28 times 365, make it a percent. So 14%. So it's just not low enough, because what I'm hoping for is that just as quickly as this price sunk and dropped, I'm hoping it's going to come back up. I don't have any expert reason other than both of these miners, CleanSpark and Riot, they hold a lot of Bitcoin on their balance sheet. So all of my trades basically are around the movement of Bitcoin. So if I look again at this spreadsheet, altogether I have $73,000 of value, and it cost me $80,000. So I'm in the hole $7,500 right now, and the price really is not high enough for me to sell covered calls. Now I do have this CleanSpark that I bought at $292 that's now worth $948 in my holdings, but I'm kind of saving that for a rainy day. So I want to deal with this Riot and CleanSpark basically on on what I was put. So I was put this at 1050 and this at 14. So that's what I want to sell my covered calls with. So that's the risk that I knew about and that's happened to me. Is it's great earning premiums when you're selling puts and having the underlying expire above the put price and cycling that, but this can and does happen where the underlying will drop so much that you're just stuck with it. And so anything personally that I'm selling puts on, I have to make sure that I wouldn't mind owning it. And I don't love owning Riot, and I don't love owning CleanSpark. So I sort of broke my own rule, and now I'm remembering when I have that uneasy feeling of why. Okay, so that's Friday, and that's all I have.